To remain updated with the latest business news, click on the bell icon.
Presented by Ebix Cash. हर खुशी के लिए काफी है.
Hello and welcome to the Business Today show. I'm your host Udayan Mukherjee. Well, this is the age of the digital unicorn. First-time entrepreneurs chasing their digital dreams and becoming billionaires literally overnight. Well, my guest today is a first-generation entrepreneur, a newly minted billionaire, but he's not from the digital world. He's very much from the real world. In fact, as touch and feel a world as you can imagine, it's the world of hospitals. In fact, the way the decks are being lined up, one day, not very far away, he may well become India's hospital king. So it gives me great pleasure to welcome to the show Abhay Soi, Chairman and Managing Director of the Max Healthcare Institute. Abhay, it's wonderful to have you on the show today and welcome.
Thank you, Udayan, for very kind introduction.
It's a perfectly legitimate introduction. You are a billionaire and you're quite young too. And you're not from the digital world, but you've done so many things in your life at a fairly early age. I shouldn't use the word dabbled, but you were once a turnaround expert at Arthur Andersen. Then you ran a special situations, almost a hedge fund for the legendary Seth Klarman, before you came on to this hospitals business about a decade back, which you've made a great success of. But would you say that having done all these things, in healthcare, in hospitals, you've now truly found your vocation in life?
No, so absolutely. I think, I found a vocation in life with the hospitals and healthcare. But I think, when I look back, pretty much all of what I've done, be it sort of restructuring, turnarounds, as well as do value investing or the masterclass in value investing under PowerPost, when I was running a fund for them, a special situations fund. And I think that is perhaps been a part of Destiny's my little steps towards getting into healthcare. Because I was really an outsider to the game, getting into healthcare, really looking at, and my domain again has been turnarounds and restructurings within the healthcare space, as well as being able to sift the wood from the trees and look at value investing opportunities to be able to do so. So I think, that, and now coupled with the domain knowledge of healthcare, something which I've been pursuing for the last 10 odd years, and that's pretty much the only thing I do now, has helped us create this, if I may say so, quite a formidable platform within the hospital space.
But you could have stuck on with what you were doing. I mean, it was a lucrative world that you were inhabiting, consulting, hedge funds, private special situations funds. What gave you that itch to do something different? I mean, was it the fact that you would have to create something of your own? Was it an entrepreneurial drive? Or because you could easily have stuck on and continued and had a very cushy life at that?
So then at the age of 29, one day I decided that, look, I don't see myself, and with all due respect to all partners and managing partners and consulting firms, but at the age of 29, I basically decided that, look, I don't see myself as a partner of a consulting firm. I didn't know why. I quit my job and it was less to do with entrepreneurial drive or something that I had figured out, but more to do with, I know I don't want to do what I'm doing. In hindsight, in retrospect, it seems like perhaps an entrepreneurial itch, and that's when I stepped out and started a workout group. And essentially, I wasn't married. I was fairly young, so I didn't have any dependence on me, which sort of enabled me to take that leap. And essentially, what I was doing was I was asking my friends to give me sweat equity in their troubled companies or companies which were sort of dislocated, and give me a little bit of retainer, perhaps 50,000 or 1 lakh rupees to just keep my expenses going. And I started. It was very high touch restructuring turnarounds that I got involved in, boards of some of these companies, etc., which entailed everything from organizational to operational to financial restructuring of these companies, all with varying degrees of successes and failures. I think the successes, which were far and few, made me a lot of money even at that point of time. But the failures, I think, those were the ones which really taught me. And in so many ways, and I can't even begin to tell you that what I learned while restructuring some of these brick and mortar companies largely has come to bear and was very helpful. That experience in the healthcare business whilst I was turning around hospitals.
And the last couple of years could not have been easy. Must have been very challenging. I can imagine at the helm of a healthcare business. Now, has the pandemic strengthened your resolve to take this healthcare business forward, or has it led to any kind of self-doubts creeping in? I mean, how did you exit this pandemic phase? Feeling what?
So I think first and foremost, it was the situation in which we entered the pandemic phase. We just completed the acquisition of Max, and then a very complex merger demerger to create a listed company, which I had never been associated with a listed company from at least the sort of role that I was playing. Combining it was a bit of a David and Goliath, because I had a 2 hospital chain which was acquiring a hospital chain of about 14 or 15 hospitals, and something which was 3 times my size. We bought it at 28 times EBITDA, whilst the market was trading at 17 to 18 times at that point of time. It was a highly leveraged buyout. The debt to EBITDA was 8 times. We had persuaded KKR to back us on that deal. So a lot of credibility at stake. So a lot of planning had been done in terms of, you don't get into this situation and then figure out what you want to do. I think a lot of the homework, a lot of the detailed planning of what you're going to do with every nut and bolt over there in order to unlock value and have the clarity. We felt we had that clarity. We had gone over what we intended to do many times, in office, while sleeping at night in our beds, and so on and so forth. But till you've done it, it hasn't been done. At least although there was confidence of having been in not the same, but somewhat similar situations of a different nature in the past, I hadn't attempted anything of this size and scale. But here was also an opportunity, in terms of Max, to be able to, have or create a platform, which would be, really goal-edged in so many ways as far as the healthcare infrastructure is concerned. Now, again, do keep in mind, 2 years ago, when this transaction was done, most of the investors had sort of been disappointed by the Indian healthcare space, because most felt that it's been a mirage. The EBITDA margins have been low double digits. The ROCE has been high single digits, and the promise of Indian healthcare has never really sort of come to bear. And so this was the situation, and perhaps a little. I think with the exuberance of youth, if you may want to call that, even at this stage of my life. But I jumped into it. We were able to sort of, and whilst we were, kind of cementing the synergies, implementing those structural cost savings, and so on and so forth, lo and behold, COVID came and hit. And with that sort of balance sheet, very sort of, I won't say paucity, but the cash flows were limited, and there was this severe lockdown. And then you had a situation where, our occupancy came down to about 30-35%, and, supply chains disrupted, no money in the banks, no revenue coming through, etc. And over and above, whilst most sectors, and with all due respect, most sectors did face that hardship, the difference here was that, look, rather than mothballing operations, we had to get people to turn up to work in an extremely uncertain environment. And, by the end of the day, whether from the top or the bottom, I don't think any of us were trained for this role and this job. There was a severe lockdown. We have 25,000 healthcare workers who work for us. And imagine asking 24-year-old nurses, etc., and other healthcare workers to turn up to work while everybody else is at home, and at a huge cost, risk to themselves as well as their family members. It's not a sort of role that I was prepared for. Anybody in my organization was necessarily prepared for.
Let me bring the discussion back to the issues that you spoke about, and correctly so, that investors actually were not very optimistic about the healthcare sector because, as you said, I mean, it was a low ROCE kind of a business, and people were almost on the verge of giving up on the sector till Max happened. What would you say is the true or potential return on capital employed of the hospital's business? I mean, you are running close to 30% today on that. Do you think it's sustainable over a period of time, but the kind of margin profile and the return profile that you've been exhibiting?
My belief is, as hospitals mature, with the advent of and this huge digital revolution which is happening, at the very least, it is going to allow us to and enable us to reach out to more and more people, more effectively and efficiently, which essentially for a quaternary care or tertiary care hospital like ours, what it does, it helps us to reach more people and convert more people. Then you've got this whole digital revolution which is happening, which is quite phenomenal. This entire proliferation of insurance which is happening, which is quite phenomenal as well. This segment for us has grown by 26 or 27% over the last 1 year. Coupled with the fact that, at present we've got, the international medical tourism, which has not been sort of come back to its full potential because of the strict travel restrictions to the country that we've had. That is something which should solve itself over the next, in the short to medium term. And, that should provide you further sort of margins to the bottom line. Now, I mean, you do keep in mind that, most hospitals and all hospital chains have been going through a, period of serving COVID patients in lieu of the usual elective surgeries. And most COVID patients come under price capping. So our EBITDA per bed, our ARPOB for COVID patients, etc., are a lot more subdued than what it is for our usual elective and tertiary care surgeries.
What are you doing which is different from what other chains are doing? You talk about this kind of return ratios, this kind of occupancy levels, EBITDA per bed. What is Max doing which is different from, say, what a Fortis or an Apollo is trying to do?
So I think first and foremost, we are very blessed that we have a majority of, or we have a significantly higher amount of beds for us are located within the metros. Now, what happens, and even when we're expanding going forward, we're adding locations, a tremendous amount of locations within metros, simply because, within our network of hospitals, we have these land banks which are available. What that does is, whilst across the country, as you are aware, there is a shortage of specialists, right? Be it for oncology or any other sort of clinical treatments, the ratio, there's huge shortage of specialists like there is for most professionals across the country. But, that's not the problem in metros. You do have the best professionals, the best clinicians, etc., who live within these metros simply because the social infrastructure is there, the schools and colleges for the children are there, and so on and so forth. That allows us to and enables us to focus on more tertiary care and more specialty. So, if you actually see, we have 85% of our total capacity right now within the metros of Delhi and Bombay, whilst our closest competitor would have about 70% of the capacity. We have about 53 to 54% of our business, which comes through surgical revenues and the balance through medical revenues. But I think, if you look at most of our competitors, it's about, 37 to 38%, a business which comes from surgical revenues. Now, if you actually look at the amount of critical care beds, again, that is demonstrative of the fact how many surgeries you do. 30+% of our total beds are critical care beds, ICU beds. Vis-a-vis, I think for others, it's about 21, 22%. So what that essentially says is that, look, we are doing a lot more tertiary care. We're doing a lot more surgeries. We are able to do that because not only infrastructure, but we also have 4,600 senior clinicians. Most of them who work for us on an exclusive basis, and which we focused on high-end tertiary care and specialty surgeries. And we're able to do it, like I said, because we are based out of the metros.
Will this be the way Max grows in the future? That you'll be focused largely in metro cities in the north and west of the country? Or are you looking at a geographical expansion beyond that, maybe to the south and east in a big way?
No, absolutely. So we are looking at both a geographical expansion. What we are also looking at doing is tier 2 cities. Places like Dehradun and Mohali are excellent examples in our portfolio, which are perhaps the highest return on capital businesses, again, doing very, very well. What we don't want to do and what we want to stay away from essentially is doing greenfields and doing projects in non-metros and in other places. We are tying up with developers and REITs to be for build-to-suit hospitals. Because every city, every state has its own building codes, and I believe a lot of hospital chains in the past have perhaps miscalculated both the potential for time and cost overruns. So that is something that we sort of want to stay away from. But we want to tie up with people whose core competence is to build in these places. So we are looking at geographical expansion through that. But what we do like is a cluster approach. We would like to add to the clusters we already present in. But any new place we enter, we would like to do through a cluster rather than a single standalone hospital.
How much of your growth will be fueled by inorganic moves, Abhay? I mean, are you looking at mergers and acquisitions seriously? Because not everybody can run hospital chains as successfully or as efficiently as you do. Does that open up the space for going out and cherry picking assets across the country? I mean, if I were to ask you in the next 5-7 years, would you be buying hospital chains, existing chains? Would the answer be yes?
I mean, I'd be surprised if I wasn't to do it in the next 1 or 2 years. That has been inherent to us. It's a part of the DNA. This is how we've grown over the last 10 years. Look, really from no hospitals, no healthcare workers, no revenues. We started in 2010-11, and this is 2021. You started by sort of drawing a parallel between us and unicorns. And I think, we reached where we have over the last 10 years. So it's from 0 to 25,000 employees, 0 to 15, 16 hospitals, and, a reasonable market cap, so to say, and revenues. And, it's largely been done through acquisitions and forging this platform together. At present, we have almost a debt-free balance sheet. We should be debt-free by the end of this calendar year, effectively. We are generating a significant amount of free cash flows. Even at last quarter's run rate, you would see 1,000 plus kind of crore free cash flows, which we are generating. Over the next 4 to 5 years alone, we believe we'll generate 5 to 6,000 crores of internal accruals. And given the fact that it's a debt-free balance sheet, even if you were to assume very, very sort of prudent debt to EBITDA of about 2 to 2.5, we should have about 11 to 12,000 crores to deploy, within the next 4 to 5 years. Now, there's a significant amount of organic growth that we are looking at because of the land banks that we have in our network, which will allow us and enable us to double our capacity in the next 4 to 5 years. But that's only going to take or utilize about 3,500 crores of our internal accruals. So what that means is we still have about 2 to 2,500 crores of internal accruals, plus our ability to leverage, like I mentioned, that gives us a war chest of about 7,000 crores at the very least for M&A over the next 4 to 5 years. Most of the organic growth, of course, the investment of even 3,500 crores is going to be back-ended because initially you want to set up superstructures, etc., and the equipment and the more finishing and the more expensive stuff is usually back-ended. So we also believe we have great, tremendous opportunities to be able to do it in a value-accretive manner going forward. So I'm quite, I think there is an opportunity and a responsibility to allocate this capital in the near future itself.
So if I heard you correctly, Abhay, very quickly, if you could tell me that if you're saying that your internal accruals will allow you to double your bed capacity over the next 4 or 5 years, leaving a lot of cash and leverage to utilize, could it be possible that your bed capacity in 5-6 years could be even 4x of what it is today? Maybe 15,000-16,000 beds?
Well, I'm not certain whether it can be 4x from here, but I think through organic growth, it can be 2x. And then, like I said, the 7,000 crores to employ, it really depends on where those opportunities are going to, will fructify. If it is going to be extremely, extremely metro-centric, then, the cost per bed sort of acquisition moves up. But, there is an opportunity to go up to that much. I'm not saying that is off to this thing. It's a little difficult to sort of crystal ball that. But I think 3x should be pretty much par for the course, and if we do better, we could possibly look at 4x as well.
Finally, you're not even 50 and you've already built a really credible and solid platform to build on. Where do you see yourself by the time you're 60 in the next 10, 12 years? What's your vision for yourself and for Max?
My belief and my fundamental belief is that hospitals like Max Healthcare are not the answer to India's healthcare problems, but the world's healthcare problems. I'm a great believer in this. I believe the competitive advantage that we have in this space, no other country in the world comes even close. I'll just give you a couple of numbers. We run the fourth or fifth largest bone marrow transplant unit in the world. And what we do for $35,000 is done at MD Anderson with similar outcomes for $850,000. We do a heart transplant for 70,000 euros. It's done in Europe for 1.1 million euros. A bypass in the US costs $130,000. In the UK, it costs $100,000. In Singapore, about $32,000. In Thailand, $22,000. The best hospitals in India do it for $5,000. We're the largest exporters of doctors, medical technicians, and nurses to the world. We're connected by 7 hours of direct flight to about 60% of the world's population. So I seriously believe that with the aging population, rising costs around the world, and I think most treasuries and most self-pay wallets as well are strained towards healthcare. And I think I genuinely believe we are the answer to the world's healthcare problem. So I do see not only Max, but I think the Indian healthcare sector takes its rightful position going forward. Perhaps akin to what the IT sector has done in the past.
Abhay, on that note, I shall thank you because we are out of time, but it's been a pleasure hearing you and I wish you all the best for your journey and your ambitions. I'm sure all of it will come true. Thank you very much for joining in today.
Thank you, Udayan. The pleasure's been entirely mine. Thank you.
If you like the video, do like, comment, share and subscribe.